Good afternoon, everyone. Today's Monday, the 28th of November, and this is Brian Shannon speaking. Let's take a look at these markets here. The impressive headlines would read, that the S&P was up almost 3%, and the Russell 2000 close to 5% today. But obviously, we're still in a downtrend, and it's very difficult to trust this for more than an intraday bounce. And we really had a tremendous amount of volatility in here today as well. You can see that we're kind of struggling with that VWAP. We broke down in here, and it looked like maybe we're going to head down to the 2-day volume weighted average price. But then the market did find a little bit of support near the 5-day moving average, which is interesting to observe, but still not able to trust this market. But when it touched that 5-day moving average, you can see the market exploded higher here in the last 20 minutes or so, trading, rallying almost $1 for the SPY and getting it back above that volume weighted average price. If you made a lot of money today, I think you probably took a lot of risk. But sometimes it pays to take that risk, and hopefully it doesn't do something to create bad habits. We've been observing these Fibonacci retracement levels on the way down. That is, we've been looking at from the October lows to the October highs. Now, as it appears, we have maybe a short-term bottom. What we want to begin to measure is, where does this market have the potential to bounce to? And a couple things become clear pretty quickly. First of all, you see that this prior support in here, and let's take a look at that on the 30-minute time frame. So this prior support in near about that 122 area, that's kind of just a zone or a band of prior support. But then if we take a look at, since we've been measuring off the October high, if we take the October high to the recent low and put some Fibonacci on that, what you can see here is we're taking this range down to, from that high to the lows we saw on Friday, and we're measuring some Fibonacci bounce retracements. 38.2% here would be the 50% retracement, and that 61.8% retracement. You can see that we've got this, the 50% retracement was at this prior little level of support in here, and I think that it looks like, if we're going to bounce, maybe we get up to 120. Well, here the bottom of this range was about 121 and a half. That's where the 38% retracement would take us, up to maybe up to the 123 level. And we look at that daily time frame, we've got still a declining 10 and 20-day moving average. As I said, I think on Twitter, maybe it's just hard to imagine that this market's going to be able to turn around quickly. We've still got all kinds of headline risk and rumors and all kinds of things that are affecting the psychology of the market on not just a daily but intraday basis. We're seeing these massive moves, so it's a difficult environment, and the opportunity is there if you're really on top of it. But you really have to be watching it, basically tick by tick, and it's a frustrating environment to trade in. So continue to trade smaller share size, and obviously manage risk is always job number one. The Nasdaq was up close to 3.5% today. And as we know, it had exceeded and closed down below that Fibonacci, the 61.8% on Friday, but now we're back up to the 50%. So the obvious level of where we would expect to find resistance would be at this prior area close to 56. 56 up to about 56.30 or so. It was a big prior level of support. Support broken, tends to act as resistance. If we again put some Fibonacci on here just for measurement purposes and to give us an idea of what's potentially there, we can see a 50% retracement of the recent highs, that is the October highs down to the lows of Friday, would bring us right up to that 56 level. So that's another reason why 56 would now stand out as the more obvious potential level of near-term resistance. And of course, on the daily time frame, we've got that 50-day moving average, which is declining in there as well. So we're getting all kinds of price volatility, and the market's going basically nowhere. Crossback, that is the Nasdaq crossback in a positive territory for the umpteenth time this year, and it's been a volatile environment, but 56 is clearly an obvious level that we want to keep an eye on if this market continues to rally. We've got this little resistance level that's formed right here, just under $55 a share, 54.80. So if we can push up through there tomorrow, maybe that That's what sends us up to first close the gap rather, and then perhaps continue up towards that 56 level. But I think, getting back down through today's low, both in the Nasdaq at 54.17 and in the S&P 500 at about that 118.80 level, would be where we would want to, be concerned and think that no, it's not going to, in fact, show us a more sustained bounce. By the way, because it's Monday, this video is brought to you on YouTube and on my site from Realtick. Realtick is the charts that we're looking at here each time that we do this, and where you can execute orders. There's a number of broker dealers you can use Realtick through, and their site is realtick.com. You can get a free trial to this awesome charting platform, and there's so much more to it that I don't show you here each day, but is really good great for trading. The Russell 2000 was up 4.76% today. So we had seen on Friday that it came down and closed exactly on that 61.8% retracement, or as close to it as you're going to come. And this is where we get the bounce from. So if you're one of those Fibonacci buyers, it worked this time. A lot of times it won't work. It didn't work at the 38.2. It didn't work at the 50% retracement. But if you stuck your neck out there and bought into the weakness Friday afternoon, and of course Friday was a horrible close, well, you woke up with a great gift here today, and we saw the same type of volatility, obviously, in the Russell that we did the other markets here. And now if we look at these Fibonacci levels and in just prior support, the big level in here is going to be about 71.5. So if we take a look down at the 30-minute time frame and we put those same retracements on from the top to the bottom, and say if we're going to retrace 50% of this October high to last Friday's low, a 50% retracement will get us right up to that 72 level. So here we are, for the first level, of course, 38.2%. You can see that was prior support that turned into resistance last week. But we're struggling with the 5-day moving average, and all these markets look like they're capable of a little bit further bounce, and clearly, at the end of the day, we saw some strong buying. So as long as we hold today's lows, this will be kind of what we want to compare against for the next few days, at least in the remainder of this week. But we've got a couple levels that have been important: 71 and then basically 71.60, and where we have that retracement coming in at about 71.85. So those are potential levels of resistance on the way up. If you're trading it and holding on, raise your stops up. Maybe this market just continues to go. That's how you let a winner turn bigger. But are you comfortable holding much share size? I know I'm not. In fact, I'm flat, but we've got a declining 10 and 20-day moving average. We're just below that 50-day moving average. It remains a real mess here. The semiconductors, as we know, broke an important level of support at 30.5 last week. That's also where we see now the 10 and 50-day moving average. So we've got this shakeout where we had seen that 29.5 was a prior support level. We came close to that today. 29.38 was the high. And when we look at these Fibonacci's, we of course exceeded it slightly. That is the 61.8% of the October range on Friday. But we got the bounce today. Now when we take a look at a 30-minute time frame, we're still below that declining 5-day moving average. So maybe, again, these semiconductors are lagging a little bit. But if we take a look from the highs in October to the recent low, where do we have the potential to bounce to? Well, look how nicely that 50% retracement lines up with this prior support level. What would be also interesting to do is take actually a volume weighted average price from that high, and we'll do that maybe in the next video. But the financials, they continue to be terrible looking. There's we can draw some trend lines in here that look like, hey, bullish, that we're breaking a trend line. Depends on which trend line you want to believe or observe, but we're still below some of these trend lines from the last couple months. We're still below that bigger level of prior support that broke hard at 1280, which really broke these markets. So 1280 is the big level where we would expect to encounter resistance on any bounce, of course. And that's a pretty long way off from here. If we take a look at the 30-minute time frame, which actually I guess we're on, but if we take a look at the Fibonacci's for a bounce in here, you start to see that these levels become more meaningful a little bit, even with Fibonacci. Now here, maybe 1270 is the 38.2% retracement, but still, I mean, there's nothing bullish about this daily chart. We've got an ugly mess for a market. We have for most of this year, and there's no reason to think that that's going to change anytime soon. They're not solving these global issues with a new meeting or a new policy or a new loan to these guys or those guys. We've got a lot of big problems that need time to work out. Fundamentally, that's not my job to understand, but technically, the message of the markets is that we're going to continue to see this type of volatility, and you can't read into any one particular day as far as thinking it's going to be starting a new bullish or bearish trend.